2023, where I usually promote some financial literacy concepts. So, as an overview of what we are going to cover in this little newsletter, we shall have a look at the highlights of 2022. What are the predictions of 2023? What are the considerations for the ESG? And a little fun section part. Alright, so to start with, we cover a little bit of the highlights of 2022. In overall, 2022 was a tough year for IPOs in the sense of stock market volatility and economic uncertainty. Generally, it was a tough year not just for IPOs when we see that the new normal looks different for the past 20 years. People have been suffering from a certain mental anguish. People are less capable to deal with new shocks. However, we've been quick to normal operation. That may be due to the massive vaccination campaign and that people have been more positive to going outside and to start back what they were doing. There are some hawkish comments raising concerns about a possible recession, that is through the rise of interest rates. We can see that the car industry is still struggling to cut inventory amid waning demand for used cars, which makes it a very dark industry for now. And in 2022, we've also seen a complete collapse of one of the largest hedge funds in crypto space. The general crypto malaise has hurt investors in terms of the contagion effects have led to high-profile bankruptcies and insolvencies. So what do we learn from that? It is that the cryptocurrency, yes, it does make you get huge gains at times, but when you lose a lot more. Now coming towards the predictions of January 2023. So how much I would have dreamed to become a tarot card reader, but I'm not. I don't do tarot card reading and I don't read horoscopes, but let's just do a little January prediction in finance. So we see that the gold and precious metals have shown signs of strength, becoming more attractive. So this is a good allocation field for portfolio diversification. It seems like a nice venture to manage your risk and to get a higher return also. With a rapid rise of interest rates, except in China and Japan, to battle inflation, it is likely to cause economic contractions in US, Europe, and UK. However, we do not know how long the recession is going to be and how deep it's going to be. Okay, so we can predict that the most impacted field will be the high growth technological companies and the consumer discretionary field, and the less impacted will be the healthcare, utilities, and the financials, provided that the downturn is relatively short. Now coming to the ESG considerations. So what I mean by ESG, it is covering the environmental, social, and governance practices in portfolio management and in finance. So it is a thematic investing rather than benchmark investing. So what I mean by thematic investing is that you build an approach to focus on predicted long-term trends. The philosophy behind thematic investing is that it caters for rapid urbanization, it addresses climate change and resource scarcity, and also shifts economic power and demographic and social change. In ESG, we cover the concept of risk sharing and green bonds. So there has been Amundi in France that has created a passive portfolio management which excludes non-economical and non-ecological funds. So how does it do it? So it takes the index funds, CAC 40, S&P 500, and it it removes the funds that are not economical or non-ecological funds, and it replaces it with a fund which has a better long-term goal towards environment and and um, and manages the risk and green bonds like this. If you want to understand it through a little allusion, it's like a bottle of Coca-Cola. You you remove the sugar and you add aspartame to it, and your doctor is happy. So similarly here, you remove non-economical and non-ecological fund, and your investor who is more considerate about the environment is happy. The, the results of ESG is that hiring becomes more effective, there is innovation in your team will manage risk better, and your team workers will have a higher commitment towards long-term goals. Now for the little fun section. So this fun section is going to address particularly the millennials and the Gen Z generation. So we have today going to introduce Bob Iger, which was managing the Disney Group for 15 years from 2005 to 2020, has been called back to Disney Group. Yes, and he's aged 71 years old and has built prestigious acquisitions in the past, such as Pixar, Toy Story, Marvel, Star Wars, and Century Fox. So, yes, age is just a number at times. If you want to make retirement fun, you can choose the work optional option, and you will have goals in your life. You will live longer, and you will stay happy. That's like my motto for life. And as a conclusion, we conclude through a little proverb here. Empathy without boundaries is self destructive. So, this is a concept that I learned in 2022. Um, overcome the gravitational force that attracts you to sadness. Learn to say no. And we conclude here. We shall stop this little video here. Thank you for watching.